bracketed market inside of it, right? The only thing you can notice is it shifting up or down, right? If the POC shifting down, that's a little bit more bearish. And in this case, I would say it was, shifting up, and then a massive drop here, right? But the value is still overlapping. So now, if they can push this POC eventually to trade above this value of maybe 2 years here, that would be really, really bullish for this stock. But I usually rely on CPOCs, cumulative POCs, to define when we're in a bracketed market.
Gotcha. Thank you.
One thing to note, this is very important when you're a long-term investor, right? The long-term buyer and the long-term seller will not exchange hands much, right? I guarantee you that you don't have a long-term seller selling at the bottom here a snap, right? It just doesn't happen. And if you look at TTD, right, we've been watching this one. So here's a TTD. Well, we talked about it in one of the classes, right? Here's the value of like 4 years, 5 years. They came right to it, right? And we talked about this level, and they're most likely headed to about 55, so about $15 to here. But you will not have a long-term seller setting it below a 4-year value. That just does not happen often. So if you're looking for any stocks, for instance, let's say you want to buy Apple, do you think a long-term buyer is sitting here?
No, probably a seller.
Yeah, so most likely they're looking to see, hey, is there any opportunities to sell? We're almost at all-time highs here, very close to it. So you have to, as a buyer and seller, right, for your portfolio, you have to look at the picture a little bit, differently, right? And I look at it, if I'm buying Apple here, why did I miss the opportunity to buy it, let's say on the retest when they hit this 169 level that we targeted for a while from the short here? Why was I not interested here, but I'm interested here? What changed in the Apple to justify, $100 increase and I'm not in it? Well, for me, that there's no justification, right? And then you have companies that just get news and whatnot, like Oracle. You see this one here. So we're trading above value, but then you see us holding this gap really, really quickly. So what could you target for a buy on this one here? What do you guys think? Just the concept of value and buying. Remember, this is a building value, so if you want to change it, we could change this to a half here to see what's actually happened and then get an idea. So now, give it a second. So here's your half year value. This is the second half of 2025. Here's your first half. So what could you guys target to buy here? Is there anything you guys could target?
The top of the lower node.
Okay, like are you talking about here?
Yes.
Yeah, that would be a good level. If you can get this at 260, might not be bad, right? Considering this company's doing a major shift, I would say, in what they do, silently, right? It might not be a bad idea to consider this, right? So if this was the balance, and then we had this massive, I would say, volume and everything, and they drop out of it, just the fact that what we talked about, market goes balance to imbalance, massive gap, and now when they bring it back up here, either we're going to accept or reject this, right? So when you come here, it will not take long for you to realize, do I need to close this trade, right? You have some high volume nodes here that you could definitely use, and there's one sitting right here, about 249, so you could hide yourself right below it. So a $15, $20 stop loss on this is not bad, considering the potential it could have, with the shift towards data centers. So I would definitely take a look at this one, right? So, and another player, that I've been looking at for data centers is this one. And when you take a look at this stock, they're purely data center driven, and you see, how much they've appreciated over 2001 to here. And I don't think it's done. If everything's going towards chips, you're also going to need a lot of data centers and a lot of power. So hopefully that makes sense on value and other time frame participants. The three components, right, that we care about, and at least that I trade with, is time and volume. Price is used as a discovery tool, right? It doesn't mean what you're asking for, you're going to get it. Time is there to regulate the opportunity, right? So when we trade TPO, those periods help us with opportunity, something that happens in M period, like we know, whether it's spike, right, or not, right? Your opportunity to buy or sell is shortened as we come closer to the defined parameters of the day, right? Open and close, but also in terms of price. Price at advantageous level doesn't stay there for long, right? It comes in and it's gone quickly, right? On Friday, if you guys remember the crazy stuff that we bought, the Jack in the Box. So I gave you guys, if you guys looked at where I got it, I posted that I'm looking to get in somewhere around 877 or 87. I got in and it was basically a run ever since, and you can take a look at it, but you can see us coming back to a high volume node. You're coming back for a revisit, and I was kind of ready, go below it, reclaim it, and I'm going to jump in, right? So most likely we're going to be seeing like $20, $21, and then ultimately 24 on this one in short term. And that's because the opportunity was there at that time to get it. And opportunity paid off quite a bit on the short term, right? About a day worth of holding, and it's a couple of $1,000. So time is just also an opportunity. Volume is our activity kind of measure, right? And it confirms the price action, right? If you're going higher, the expectation is the volume is going to follow as well. When you're auctioning higher and volume is disappearing, that should be a concern that maybe the auction is not sustainable and that we're not getting enough participation at those levels, right? So you should be noticing that as a trader, especially if you're holding something long term. If you guys remember when we acquired AT&T, or at least I did. So we talked about AT&T. I think it was most of us were at 13 something, right? And here's an example of that as well. So let's just change this here for a moment. Give us something here that we got. There's a balance. I think the lows were stuck here at 13.9. So this one is pretty good as well, right? At that time, I think it might have been below the value or whatnot, but it was in a lot of our scans for the monthly, quarterly clouds, and then it kept showing a lot of divergences. Paid raised dividends, right? Has a lot of cash. It's a cash cow business. At that point, they went below the value of, I believe, a couple of years that we have drawn at that time from here to here. They swept the lows and then they gave you a nice uptick with volume and they closed above it, and that low was basically set. And it's the same concept, and I believe we did, so if I recall, it's been a while. I think we might have done this, something like this. So this is your second sig. If you're looking at here, anytime you went below it, right, the buyers came back. They came back, they gave a retest, they went to the highs, then they went below it. And then what happens, you have a really nice candle. This is the candles that I'm kind of looking for, especially if I'm looking shorter time frames, right? Is when you're consolidating like here. This is a nice consolidation, and you get this nice candle, uptick in volume, nice bottom with the thick, with a lot of buyers absorbing the sellers, with the wick showing here, and then you make higher highs, and then the rest, right, just shows up afterwards. So this is not a bad setup to look for, especially when there's value that's being cracked below and then it explodes, right? And you can find this over and over. You just have to know what you're looking for, right? And you're looking for consolidations, the sweeps of the lows, go below the value, a nice candle to get you back inside the value, and then crack that high, and you can proceed. And your drawdown should be very minimal on stocks that do this. Okay, I think any questions on time? And the way I correlate time and transactions, right? The more time you spend in an area, the odds are that you're also going to be spending a lot of transactions or volume at that level. And typically, when you guys look at the charts, right, if you're to go on higher time frames, for instance, let's say a TPO on a weekly, maybe. Or let's do a monthly. Just so you guys can see it, right? Most of the time, they will match, right? I would say what I mean by that, the volume will match to TPO. 9 out of 10 times it'll match. But when it doesn't match, what does that mean to you guys? When volume and time don't match?
The value is gonna shift.
Okay. Anyone else?
They're allowing people to get in at a disadvantageous price.
What do you mean?
If they spend more time in a place where it's not advantageous to buy, then more likely they'll trap more people there.
Why would volume POC be different than TPOC? And what could that mean for you?
Because the TPOC is just based on the time, but the volume is, the participation.
Would it be like
So-
other time frame people coming in?
Okay, tell me more.
I'm just thinking like if we spike up and there's a large volume sitting there, you won't spend that much time there, but there'll be a large volume to drop it back down.
Exactly. Yeah. That's what I was looking for, right? Sometimes volume comes in quick when price goes advantageous, right? You will not necessarily spend a lot of time, but there could be a large order sitting there and it gets bought or sold, right? Depending on where we are. So those will kind of drive the differences, right? I don't know why this is not coming up even on auto TPO. Okay. Let's see. Should not take this long. Most part here, you guys see that. Let me see if I can make this smaller. What do you see on the volume here? For the most part, the volume is matching to where the volume is on the POC. Like the last 2 months, it's very close. The month prior in August is perfect. So usually when you do find an imbalance like that, right, it's worth noting, like this one here is matching perfectly as well. So they spent large volume and large amount of time here. And from there, what happened? Well, we didn't migrate a lot of value in here. Whatever this is on T, but you see a lot of volume and time migrated to higher levels, which means the prices covered new levels, the value is being accepted, and then if you just pay attention to these values, let's say this value here, what did we do when we went below it? And let's say month of June, when we went below, what did market do?
They bought it up quick.
Bought it up quickly, right? They bought it up quickly, and now they tried to shift volume here. And this is just example on T, right? They tried to shift the volume up here, but what did market tell you so far? If this was the volume area, right, that they're targeting, and they're rejecting it, and a really nice shift of value, right? For now, this area is being rejected. So there's a very high chance that you're going to the bottom here, right, to test it.
Wait, sorry, could you re-explain that? I didn't catch it.
So if you think about this, the value, this is the kind of the monthly that cracked it, right? It was a double distribution. They agreed on volume here. Then they shifted that volume starting kind of like right here. They're trying to build value here and they built it, right? 1, 2, 3, 4, 5, 6 months. They traded in here. And then they tried to shift one more time out of this zone, which is the top here. Color it pink. They tried to get in the pink, and what happened? They obviously peaked a few times. They tried here, they tested it. And then when they did try to shift, you see the POC also shifted, POC migrated higher, values overlapping. And then eventually you see now in September what happened. They're telling you there's no acceptance so far right here, and there's a very high chance you're going to be going to the bottom here. And if they can't agree on this, then this stock is probably headed somewhere around $23 to $21, right? And I would expect more buyers to be here because there'll be somewhat of a discount as well. Does that make sense?
Yes. Thank you.
Price. So this is just, the price is just a discovery tool, right? You can ask, I mean, if you guys sell anything from your house, like my wife sometimes finds stupid stuff to sell out of the garage, right? And she'll be like, oh, I'm going to sell this. Well, if you guys recall, a while back, she was selling a wine cooler, and it was like a $600 wine cooler. I was just, okay, let me get rid of it. I'll put it for $100 or something like that. And I could not even open up my marketplace because people were just flooding with messages. And at that point, what did I realize about price?
It's too low. You can go higher.
Too low. So what do you think I should do as a seller?
I mean, following auction theory, you should go up until there's only one buyer left.
So yeah, that's what I did. I removed the posting and I posted it for about 4 times higher. And then did I get as much traction? No, but there's at least 30 people that contact me at $400. Then each one that reached out, I'm like, I got an offer for 450. He's like, okay, I'll do 480. I'm like, okay. And eventually I'm like, okay, well, time for me, I don't want to hold it in my house. Price, I'll split it with my wife. So I'm like, okay, there's enough meat for me now, and she can keep the other half. But the point was that you can test the price. You put it super high. What if I put that wine cooler at $1,000? Would I have any interest when the brand new one's 700? No, but you can put any price you want, right? You're just going to find out through the market whether somebody likes that or not. And the same is true if you put it too low. You're going to find out real quick, right? When something's too low, how quickly they come up with buyers to show up at your doors like, oh, I would love that, right, at that price. Because most likely, if they're resellers, they know the value and the price of that. They're going to buy from you for 80, and they're going to turn around and sell it for 400, and they're making a profit on it. And the other side of it is, let's say if I was moving and I have to move tomorrow, do I have the time to do the price discovery, or I'm going to put it as low as possible to get it out as quickly as possible? Or if I know something's coming up, right, in the market or something, right, now let's say I had those face masks that we talked about, COVID. If I had abundance of them, right, when COVID started, I probably could have made millions of dollars, right? But if you bought it towards the last end of the pandemic and you bought a bunch of masks, you'll probably have a lot of inventory sitting. And in order to get rid of it, if you need the space, you're most likely going to have to discount the price to get rid of it. So dependent on the price, the time, and kind of opportunity that you have, you dictate the discovery as well. Well, all I'm hearing right now, from news and stuff is we are at new all-time highs, and every bank is reiterating buy ratings for stocks that are all-time highs. But they didn't offer, Goldman Sachs and JP Morgan were all about fear mongering when we were at the lows, when the tariffs were there. Like Jamie was talking about recession, very high odds when S&P was collapsing. But all of a sudden right now it's a buy time. Why is that? Why do you guys think that these guys don't love you much and they're offering you everything best at the all-time highs to buy?
Get your
Exit
money.
liquidity.
Yeah, just think about it. For you, they've conducted their fear mongering at the bottom, right? When SPY hit like 480s, the world was ending. The tariffs were coming ever since we delayed the tariffs. I don't even know what's going on with tariffs anymore. It was a great opportunity to buy. And now when you're at all-time highs, they're like, hey, this is a great chance for you. This is a once in a lifetime opportunity to buy Apple at 260. And what do you think most people are doing? They're like, oh yeah, I watched Jim Cramer on TV. Let me go ahead and buy it. Well, that's mainly because these big boys, right? They have to sell large quantities and they need people to be in one voice. And then you put Jim Cramer in front of it, where he's, kind of like a broken clock. He's right a few times a year, and people listen to him. So when they start buying, oh, like Jim Cramer told me to buy Apple, so I did. You buy it, and then shortly after it collapses, and all those ratings from the banks, nothing really matters, and it's a done deal. So you become a liquidity exit, right? At the point where the price was just doing a discovery at all-time highs. The time for you might be, depending on what age bracket you're in. Do you really want to buy all-time highs if you have retirement coming up in 5-10 years? You might want to think about the life choices, right, before you do that. So that's price time. Type of market participants, this is fairly simple, right? You have the aggressive and passive. There's never more buyers than sellers or more sellers than buyers. That's not how the market works. Market it's equal, right? For every buyer, you have a seller. For every seller, you have a buyer. But the nature and how those trades are established is important, right? If I'm an aggressive seller, I would sell at the bid, right? Excuse me, to get rid of the inventory, right? Because I want to get it as quickly as possible. I don't want to wait on my ask price to get hit. And it's the same with let's say the wine cooler. If I put $1,000 and I had years to wait, is there a chance that somebody crazy enough would buy it? Maybe, maybe not, right? But if I wanted to get rid of it quickly, I had to adjust the price, and then basically I'll become aggressive, I would say a seller, right? If I'm lowering the price to get rid of it quickly. Everybody comfortable with these? Okay. So I think we've seen, is anyone not familiar with responsive and initiating activity? Is there anyone that doesn't know responsive and initiating activity and what it means? Well, let's talk SPY. So this is our monthly, right? Profile and SPY. So here's the buying that happened, right? When in April, the tariff news came. And ever since, what has market done in terms of value placement?
Gone up.
Gone up every single month. I mean, and what that means is when you're trending higher, right? And if this is our value, which is the blue lines and blue lines, what you really want to see in trends up, what you want to see in trends up is this. As you're moving higher, you want to see them stack, right? In between. As you start going up, and let's say this auction is slowing down, you're going to start to see some of this, right? And as you see this, you should be worried because that means the auction is doing what?
Raymond down.
Slowing down.
It's slowing down, right? So what most likely is going to happen at some point, we're going to have the opposite auction where we did this, and you can see it even clearly here, right? So the auction is going up, up. Here's the first overlap, then the outside period, outside higher. Oh, nice overlap, nice. And then this was the problem, right? They consolidated for some time, and then they cracked that previous value area high. Once you did, they sold off. And now if you look here, have we had this period happen yet? Market doesn't just go from, framing up to frame down. Usually it's going to consolidate a little bit before it cracks. Have we had that period yet?
No.
Not yet, right? Is there concerns in terms of value with anywhere? So the value placement is stacking higher, but how wide the value area is important as well. Between SPY here, for instance, if you just measure it, so about 15 points in value here, about 13 here, 12 here, and then you can see, we just started October, but it's pretty narrow here so far. Is this any concern?
Maybe as a warning.
Yeah, just a little bit of warning, right? There's a little bit of warning that the value area is congested, right? It's getting tighter and tighter. That means not a lot of other time frame participants stepping in, right? Volatility and expansion of value usually means there's other time frame participating there, and more volatility in there, but you're exploring a lot more price. So right now, if you take a look at SPY, let's say this is our October. What is the level that's important for you guys to watch if you should enter some shorts, longer dated shorts? Their level of interest?
It'll be 668.
I mean, if you think about this level right here, if this is what you're referring to, wouldn't this be a fairly important level? It means a lot. I mean, it has like dual meaning, right? At one point, that was all-time highs, and it was the value area high for September. So, and then you have this one so far printed outside of this value. And what happened the day you did?
Went right back in.
I went back inside the value. They went to the POC, and they're kind of holding to. So you lose 667, and you can bet that there's a very high chance you're going to go to 654. So maybe a couple of weeks out, 3 weeks out, you play the puts, $12 move, very highly that you're going to be positive on this trade. That makes sense?
Yes.
I do have a question though. When you're looking at the volume area width between month to month, does that little section where it's not overlapping, does that have a significance? That skinny belly there?
This is your imbalance. This is your emotional. This is called inefficiencies, right? This is where buyers did not have interest in trading, right? So they're most likely going to come in when you come. It's treated as a LVN, right? And they're going to try to defend that. If you're able to build acceptance now below it, that's a big deal, and it's very bearish. Because that means you were not accepted in the high volume node. Now you're building it lower where you did not have interest before. So it does have quite a bit of significance. And usually, if they slow down to build value here while, they're shifting value, that means there's probably more continuation down. They're going to do that. If they just fly down here, then you're looking for next balance. Like, where's the next balance high that would come in? And that'll be somewhere around 647 or so.
Bounce off of or to go into?
Say it again.
Bounce off of if it goes down fast, that would be the level you would look for it to bounce off of.
Yeah, I think so, right? So I think it'll be 654 and then about 647-ish area. So then you can look at here. This is your yearly POC right now, or your yearly profile, I'm sorry. And you see the high volume node that was being built here, right?
Mm-hmm.
So if you take a look at this, I'm just going to expand it so you guys can actually see it. Watch this.
Yeah.
So watch this. Now, if you lose this area, maybe a little bit lower right here. So if you can't trade here or you don't find acceptance in here, so you peaked above it just now, let's say Monday, we crack below Friday's low, that's going to be a big deal. Most likely 661 is coming. So about an $8 drop, and then you'll come here to the bottom you'll test this, and if you can find to hold this acceptance, then you're most likely headed lower. I would say whatever this zone is here, about 645. And you see these two high volume nodes kind of split in between. Now, not necessarily would initiate shorts here or here. But if you're to lose this level here, you could really, really start a downfall all the way to this bottom massive value that's been created, right? So this would be somewhere around here, about 600, and that's about $70 apart.
Even past that third high volume node, like
This one?
between the 2 to 3, yeah, that one.
Yeah, I mean, is there a chance that it can bounce in here? Certainly. But this is also kind of like a triple distribution profile, right? So you would have to treat it as such. If this is our first one on top, then you see that you have this massive one in between here. And on a higher time frame, this would be my final one here. So I would,
Okay.
kind of treat it in between. You lose this one, then mostly you're going to this one, you lose that. Then this would be more of a grind, right? This would be annoying price action of something like this that eventually will get you there, but it won't be a flush, right? It'll be a flush in between these, right? Which might speed up, but you still see some high volume nodes that will stop, buyers will show up, but ultimately you're looking this bigger picture, low volume node here. Some people call it desert, some people call it low volume nodes, but this is how I would structure this profile.
Okay.
Okay. So when you have, buyers like this, and you can see it, it's pretty clear right now. On the yearly profile, you see us kind of popping above this, above the value, right? Above the value area high. And this is responsive activity happening, and we are all-time highs. So if you look at it on 30 minutes, right? If you go here, let's see what the market does, right? So take a look at, for instance, what happens here. Since we've been trending up, pay attention to this day and this day here. Is there any responsive activity happening here? It's actually a really nice setup, right? Between these 2 days. So pay attention to it, First, you have value area high that was set here on the short cover rally profile, P-shaped. Then you have the low value area here of this day right here. And then your VPOC, which is our virgin POC, means it just hasn't been tapped by the previous price action, is sitting somewhere around right here. So there's a lot in this area, right? And what happens, they shifted the value area higher, they're getting back inside here. And look what happens. They try to go below the value here, below the value area high and the POC. This is probably the easiest trade you guys can take. Why?
Because it went from high volume node to high volume node.
Well, that's true. Right? You're going, you're shifting into this high volume node of the short cover rally, but at the same time, right, you have the value area low, you're dipping below it this day, you're dipping below the value, and then if you look at the candles are telling you, oops, sorry. Look at the candles on these 2 days. Like I'm on 30 minutes. Look at the candles. Look at the wicks coming in. What is that helping you? It's telling you, hey, as soon as you come back here, no, we want the value higher. Even though this value of the day that you're interested in is fairly tight, it's about maybe $1. Once that value cracks, you're going to continue. And then they try to get back inside here, and look what they did. As soon as they crack that above, you can get back in, right? I mean, the value is really, really tight. Even if you put, somewhere below here, you're risking only $1. And then from there, you see the price rejected it and continued right now. On this here, is there something that you guys should note here between the two?
It's
So,
the slowing down of the value area.
yeah. So what's the key level that you guys would watch, let's say tomorrow for a short?
Those two value area highs in that POC.
For upside, yep. So I would say if you're gonna go upside, if you can clear this, you can proceed, right? Then you're most likely gonna try to build it here. But what about the downside?
Mm,
Why is 668 not coming up? So if you look at 668, right, the value area is overlapping between, even on the short cover rally, they really were overlapping a little bit. Then they came back on Friday, right? They came back right to the value area low and they bought it back up, but they're still within this tight value.
mhm.
So they bought it back up and they closed with inside. So what are they telling you now is that they're accepting
That price range.
this. So and what are they telling you about the higher one?
Rejecting it.
They're rejecting it. So tomorrow, let's say if they're able to crack, I would wait for this. Let's call it 669.9. If they can crack that, there's a high chance we're gonna visit this high. And if you level, what do you target?
Mm, that value very low on
Yeah.
that.
This zone right here becomes very, very good zone to target, right? So you're talking about 668, 665. You know, in this scenario, I would probably play zero dated puts on SPY or SPX, whatever your choice of weapon is, right? But this is where you can make a decent chunk of money, and this will be fairly quick. How do you know this will be fairly quick?
Because it's a thin profile on that value area.
Not much here, guys. There's really not much here. Once you're out of this zone, this becomes very, very quick drop here.
And I had a question for that other one where you were saying that it was had the responsive activity. Why would that not be considered a poor low?
This one here?
No, the original one before it went up through that trend day or
This one
trend.
here?
The one before that.
This one here?
Yeah, at the bottom.
Oh yeah, there's
Uh,
definitely a poor low.
so it's still a poor low, but why would you not treat it like a poor low, like that? They would go through it, or
Well, first I would take my profits in here, right? I would trim. If I'm playing zero DT, what does it tell me about my time?
you don't have that much time.
I don't have time, right? If I'm taking the short and zero DT puts, I mean, if they bounce here on zero DT puts, what happens to my puts?
You lose all the value.
Yeah, I'll lose the money. So I take my money here, and if let's say we don't bounce here and we see a nice candle volume pickup, can you get back in and target the sweep here of the poor lows? Yeah, certainly. I'll definitely do that. There's a
Yeah.
bunch of crap going on here. This should have been, if you think about it, this should have been a liquidation, but the sellers fumbled here.
Okay, so that's what I was asking was why didn't it do it originally and instead of knowing that
Uh,
it was gonna go up at that point.
That's because somebody probably had too many shorts loaded here. And what a best way to get rid of them is to, so you'd never short the whole, depending on the time of the day when that happens. And this was between 1 o'clock and noon. And you see the retail probably jumped in a lot of puts. And the floor traders probably went on a coffee break and they're like, hey, we'll come back. And when we come back here, we'll close our shorts. And when they close their shorts, what happens? What do they do when they close their shorts? They buy to cover, right? So when you buy to cover, you're helping this move.
Okay.
So, and usually this signals that there's a lot of weak shorts, right? If you're shorting here, for instance, if you're shorting here, let's say you're shorted this POC and your stop loss is right here, well, guess what? If they trigger this stop loss, they get you. The next guy's stop loss is here, and they're just going to keep grinding on no volume, right? And hit those stop losses, and it becomes a short cover rally. You're buying to cover on every one of those stop losses, and you just buy, and that's the price action that you get.
So that's why it was a thin profile.
Yeah, that's definitely 10 profile here. I mean, this was supposed to be a B profile, and it was looking for more price action here, but it's on a B-shaped profile. There's something that invalidates the continuation trend tomorrow. What is that? When you have a B-shaped profile, what is it that should give you a warning sign that price might not continue the next day?
It closed above where it ended. The last distribution was, or
So
on the opposite end.
I base it on the close above 50% of that profile. If you do, very high chance you're not going to continue tomorrow. And you can see, for instance, this B shape here. If you take the high to the low, you close below, and then look what happened the following day. Continue down. So typically, when a B shape, if it closes above that 50%, most likely that trend is done. Like you should have your kind of warning signs on that that's not going to continue.
Okay.
And I don't know if this is B shape. This is more like extended typical type of day here. Okay, so responsive. When you have responsive traders, right? Your responsive sellers show up above value. Your responsive buyers show up below the value, right? What's not expected is that you have initiative sellers show up below the value. When something's below the value, you're not looking for somebody to initiate selling below. And when something is above value, right, you're not looking the ton of buyers come in and snatch something up that's above the value, right? And you can apply that to your life, right? If you go buy a car in 2020, you're probably, and you're still, let's say you took a 7-year loan, you lost a lot of value on the cars. We talked about it, right? Yukon's going for 120 grand, and now you have a surplus of inventory, which the dealers are going to have to discount to get rid of it, right? A responsive buyer would not have bought it when the value of that car and the price is at all-time highs, sitting at 120. You wait, and when the inventory is high, then eventually the marketers or the dealers, they're going to have to go and drop this price to find what? They're going to have to find buyers in a sweet spot, right? So if they go below the value, let's say they go somewhere 60, 70, is there a chance that they might find some buyers? Yeah, maybe, right? And then they start buying based on the value. So responsive, they show up below the value. Responsive sellers show above the value. Typically, initiative buyers are not above the value, and typically, initiative sellers are not below the value.
So they don't meet because they're the same people.
Well, typically, other time frame participants don't join or exchange hands much.
Mm-hmm.
So it's not normal. If it's a day-to-day profile, do you see fights? Yes, that's how two-sided activity can create. But when you're talking about a monthly profiles, quarterlies, and that's a pretty rare sight to see.
So
Long-term buyer, long-term seller exchange hands.
Okay.
All right, so I think we covered a lot of this, balanced markets, and now we get into the fun stuff, right? So all this to lead you guys to volume profile. So let's kind of just, is there anyone that's never used volume profile, like never seen it? Let me go here. So volume profile, I mean, just like the volume that you guys have on the bottom, that's kind of like the vertical bars. I would say it's just showing volume differently where price and volume meet, right? It's telling you what price that we have the lot volume or not enough volume, which means no interest to trade there. Don't confuse this with market profile, right? Market profile also prints horizontal profiles, but it's just based on time. Volume profiles based on volume. I would say both of them combined are pretty powerful, but they serve different purpose, right? Different type of market generated information comes out of it. So with that being said, POC, the red line that you guys see, and we'll kind of go to the real profile and show you, but that's where the highest volume's been traded, right? So if the price was traded at, like, let's say $50 for Starbucks, and that's where they accumulated the most, and from that point, price basically jumped and you used it kind of like a bouncing board. From that level, it pointed higher. At some point, it's going to come back to that level, and that's called a volume accumulation setup, where we basically look for those high volume nodes. When they come to that node, we're looking for an opportunity to buy. POC can also be a virgin POC, and what that means is that that POC in, for instance, on daily, we look at daily, weekly, monthlies, it hasn't been revisited. So if you have a profile, for instance, you're trading like here. So if this was a POC here, P shape, and this was the POC, and the price never comes back to it, this makes this POC be a virgin POC. And there's a very high chance that you're going to come back and revisit those at some point. Typically about 6 to 8 virgin POCs that are unvisited. Eventually, that's kind of marks the top of how many I typically look for before price will start reverting and visiting these POCs, and they kind of act like magnets in terms of price action. Any questions on POC? And just think of POC as equilibrium. It's the fair price and the fairest price of the product or whatever you're trading at that volume and price meet together, and that's where a lot of buyers and sellers exchange hands. And that level is probably going to be important for any revisits. And there's a lot of setups that I would say that we've seen over the years. So let me show you. For instance, we've seen FedEx. Here's FedEx. And if you guys remember, this right here was a really, really nice example of it. So let me kind of go find it. So here's this. And if you just remove the value areas for a moment, focus on POC, pay attention to where we came back and what happened to FedEx ever since. Okay, you guys get the point. I can't get it perfectly. So we accumulated, right? The price was accumulating here for some time, right? So it was, I don't know how long. So 04 to about 10 years POC. And then you come back directly to that POC, and what happens to the price? Perception of that stock, considering it was at 300 here at some point, and it's driving back down to about $90, got the interest of a lot of people, right? It's called a reversion to the mean, right? When you drive the price back to the fairest point, what do you expect to happen? Considering that, you're giving them a discount of, let's say, of 70%. If I tell you that you can get your favorite thing that you've been looking for 70% off, are you going to buy it? You wanted a PC and a MacBook Pro is 70% off. It was $2,000 before. Now you just have to pay, $600 and it's yours. A lot of you guys
Buy
will
more
jump
than
on
one.
it. Exactly. And most of the time people buy that other one and sell it and wait for opportunity to make more money. But the same concept is here. This is called volume accumulation setup. This is where you grab a lot of time, and it doesn't have to be necessarily a lot. It applies 2-3 minutes. You're looking for a retest of the high volume or POC zone. And I tell you that I've seen this play out a lot of times, right? I've seen it play out on AMD quite a bit. This played out here on AMD, I think at that point perfectly as well. Here's AMD's POC. And this is exactly where we snatched it actually. So close enough, but you see the point. They accumulated here, and then a massive imbalance from there. New all-time highs were created, and you see them reloading in this area as well, right? And then you see that they respected this area, right? When they're coming down on this, you can see that, there was bounces coming in at this level as well. So they came back, right? And don't think it has to be perfect every time, because it won't be. They came back here very close to it, and then they bounced, right? They came back below it. They snatched below this box, right? And then they rejected that value, right? And that was a pretty good sign. Once they come back for a retest, you could have added longs again here. Once they snap back in, you can add more, and then, the rest is history, AI, right? And fever and everything came in. But these are the setups, right? And when you think about UPS, what is UPS, right, doing? So if you take a look at this, so what is the setup for UPS? Is it any different than FedEx? How's this setup?
Looks like they're gonna go for that POC and either accept it or reject it back down to the value low.
So if you focus on this for a moment, let me just give you a scenario. I had somebody piss me off on Twitter the other day. So pay attention to this. Here, I'll just mark it, right? So price went to the highs and now it just went lower and it's going to get to the POC, I promise. Now, if you take a look at FedEx price, you have to look at it for a point in time, right? You consolidate it. So if you, I don't know how to make this work here easily, but my point is you consolidate it, then you had this big jump, which is the same jump here. This is the same as it is right here. You guys see it? And then the drive lower is this piece here to the POC. Well, we're not there yet on UPS, but once you get there, it repeats a lot. And this will be a really good opportunity to buy, for me, UPS or add larger quantities at that level. Does that make sense? That's a volume accumulation setup and it repeats quite a bit. Any questions? Okay. So that is our POC, right? And then you can have your value area highs and lows. So this is your value area low, this is your value area high, and market tells you something when you go above it multiple times, you're not able to find buyers. Most likely as UPS goes down, I'm sorry, as FedEx goes down, what do you expect to UPS? Actually do the opposite. Because they're kind of direct competitors and that's what they've been doing for some time. This is your POC on a longer time frame, and I'm using FVP, which is a fixed range volume profile. That means I have to pick a starting point. In this case, I picked here, and then I just put it all the way to the end, and it'll give you how the volume's been distributed, right? And you can see here, you know, if I was to extend these nodes here, let's put them at 155, so you can see if, let's say, FedEx was to lose this level, 216, what do you expect to see?
Hit the next PLC, 160-ish.
In between, you will have 192 if you're, you know, option trading. And then below that, you know, ultimately you'd want to kind of close it around 160, right? And that's where you will potentially find some buyers. But this is almost like a double distribution profile now, right? So you have a high volume node here, and then you have a skinny belly here, and then another B shape here. So if you can trade here, once you go below here, let's say give you a retest, you drive it all the way. I mean, that's pretty good, $60 drop. Okay. That's volume. Volume profile components, I think I touched just now. So you have the POC. The profile low is just your low of the day and high of the day. And then the value area highs and lows. Is there anyone that doesn't understand value area high or low? Okay, that's good. What that means, you know, when you look at, for instance, daily, turn on ES, go to 30 minutes. So in this sense right here, because we're in volume profile, it just means that we, on this 68% of the, on this day, 68% of the volume has been traded in this zone here. Well, why is that important to know? Well, if we are trading outside of the first standard deviation, which is sitting here, right, on the skew, and then the bottom standard deviation sitting here, that means the second one, let's just mark it here so you guys can see it. I'll put the second one, which is sitting about 95.1, is going to be, see the bottom one stays, the high one, the second one up top is there. So there's a little bit more room, you know, for sellers to be present here. And if you think about this one, the first and standard deviation are here. So the third one is going to be on the bottom here. So if they fail to show up here, right, there's probably some initiative selling that's happening, and they're most likely going to drive it lower. But in this sense, this is your value area low, value area high, first standard deviation. This was your second. Third one would be in the bottom, and this is your, I would say, second and third will be here as well on top. So understanding this along with the bell curve, right, and I tried to kind of map it here, is majority of the volume occurring here, that's acceptance, right? When you're trading outside, let's say between first and second standard deviation, only a percentage of that volume is stuck there. So about 13.6% on either side, right? And when you add that up, right, you get to 95%. But the point is, if the tiny volume is being rejected and being brought back inside, that means you're rejecting volume, price higher, and you're going to go back and trade probably the opposite side of it. This is where the 80% rule will come and play here shortly. But this is very important for you guys to understand in terms of standard deviation, especially when we're in brackets. Meaning when the markets are bracketed and we're overlapping a lot, it's important to kind of draw your, first standard deviations, right, to make sure you understand it. And if you take a look at it here, I would say SPY was in consolidation here for some time. And you can definitely draw, your FVP from here to here and see how is it that they traded in between. And this one is actually 95. So here's your, how we traded so far. So the price really never really reached, right? When it went below the value here, you see when they snatched it back up, you can most likely target the opposite end, and it kind of went there. You went below again, what do you see? You reclaim this level, there's a high chance you're going to go to the top, and it did. You don't necessarily need to buy this as a trader as soon as it goes below. Your best risk is to do what? Or best way to handle your trade is to do what?
Wait for it to get back inside.
Yeah, wait for it to get back inside, especially because, we're talking about, a larger period of time from July to, let's say, September. Well, you went below. Now the question is this initiative sellers really mean business and they want to bring it down? Or are other time frame participants, responsive buyers, going to snatch this back in and go? And here, there was something really weird that was happening at that time. If you guys look at it, between these two candles, let me show you, because I was watching this very closely. So for me, this looked like it wanted to go lower at one point, right? And I actually got stopped on some puts here as well. So if you take a look at this, to me, this looked like, okay, well, you tried to get back in. I'm seeing wicks. I prematurely actually get in, right? Here, and I get some puts, and then I was like, oh man, this looks great. The following day, they closed above it, and I'm like, okay, crap, better off to start closing some of these, and as most likely they're going to look for acceptance and go higher. But that was, is there a chance that you can be 100% accurate all the time? No. If anyone claims that, you have to take the setups that you see. I was premature on this short entry. If I would have gotten a crack here and a close below this, that would have been great. Great for puts, and it would have worked out. But here I got in prematurely. I was like, oh, look, they're rejecting the value 2 days in a row. Got in, lost money, and then they reverted back. And you see how well they actually did. And look at this low volume node. It's kind of interesting how it trades. When people say it really trades like flying, look at this. And then they drip back to the bottom. Earlier, you asked me, I believe, Blue, what does it mean when you're like below where a lot of volume happened? But look at this. Once they got back inside, they treated that as defense, right? As soon as it dipped below, it got brought back up and they drove it higher. And then you see the congestion here where a lot of volume happened in this node. Every time we're here, what do you see? Look at the trading that happens in this area. Just congested, right? This is the slow, and then you get a pop or news or something drives it out that balance higher. Balance again, pop, and then you continue the trend.
Shorty, I had a question.
Yeah.
This is specifically like day trading, but when you say you're looking for a reclaim of a certain price point, what do you look for as to make it a valid reclaim?
So you want two 30-minute periods to be above it. And you don't want them to be flirting with the bottom or top of the value, whatever your scenario is, but you want the 230 periods to be above it if you're looking for higher value acceptance. So that
Gotcha.
means 30-minute candles to close above it. So now if you think about this, so here's this one, right? So this one opened above this value area high, and what happened immediately? This one was pretty good, right? They rejected it, and then you see they went to the bottom here. So this was good, but they're still holding, I would say, this distribution here held by this skinny belly here. Now, if you go above here, this was the value that you would have had in mind. They will go above it, and right, you see a lot of 30 minutes. So far they're accepting it, right? And now you're coming back for a retest. You need them to defend this. And what did they do? You would place your longs here, right? And you see them, and you guys remember that was the level we were targeting. I think we were short somewhere up here. We were looking to short here, and then I think it was 44 or something, the single prints that we had from the couple of weeks or days prior. They came back, but this is not a confident right now auction on the higher end. If they would have closed above this level right here, that would have been pretty good for Monday. But this right here was telling you, yeah, we're good, happy accepting prices here above this. And then when it was time to defend it, what did they do? They fumbled, right? So if you would have gone long here, and I did, but I was able to snatch, I think all of us actually took that. I think it was 69 level or whatever we did, somewhere around here. We were able to catch a few points, but then it looked pretty bloody once they started picking up volume and started selling there. It was not the best. But two 30-minute periods I seek for acceptance. And if you're a higher time frame trader, right, where you're looking for more swings, then it might be that you look for a daily close or 2 daily closes if you're looking for swings for a month out. But you cannot use daily profiles to assess. You will have to use weeklies or monthly profiles for your analysis.
Okay, thank you.
Does it have to be 2 consecutive candles?
Ideally, you want to see that, right? But it doesn't have to be, because if it's not 2 consecutive handles, what does that tell you? You might have some sellers driving the price lower, right, immediately. So there might be another time frame seller as you hit a level and it drives back down. It might be advantageous to somebody to sell there. So ideally, yes, but it doesn't have to be. And here, I mean, we had almost 5, 6, right? And then a nasty candle pick up. Okay, so high volume nodes, the way you would distinguish between the two, this is your support and resistance areas, and as you saw in a few tickers that we show in equities, they could be used as buying points or shorting points, depending on the trend. Low volume areas, this is where you didn't have a lot of interest, and if you're in an uptrend, this becomes your kind of like single prints LVNs, where you're looking for buyers to defend it if you're an uptrend on a retest. And it can also be used as a shorting point. If you're selling off from a point of, let's say, high volume node, you sell off and you leave single prints or a low volume node, those become kind of retest and resistance points for moving forward. What we use, I would say, in the Discord is I use a lot of fixed range. Visible range is the one on the right. So the visible range profile is the one that's sitting on the right, and it's just basically cumulative. Whatever is on the screen, that's the volume, but it's going to be shown. And then session volume profiles is probably, my go-to every day is to kind of analyze the market, is this, right? And I go on 30 minutes and I kind of see what is volume doing, right? Day to day, how is the values, right? When you're breaking out, are you able to see value area stacking, right? Ideally, when you want to get in a short, is that you want to see value basically get rejected nicely. Is this a sign of a rejection? Yes, but what would make it a little bit better is if we can start building the value up here instead of just overlapping them higher. You need a shift in the value to start shorting. So can we short what we talked about? Yeah, certainly. You could definitely short that, target area below. But a clear trend reversal is when you see a value being rejected and then it basically shifts it all the way down. And that's potentially a start of a new auction in the opposite direction. PVP. So on this, what I talked about, so you can use it multiple ways. I use it for weekly analysis, right? I use it for monthly. And then you can just put in how many weeks before do you want? You want 3 weeks for some reason? Sure. Can you do quarterly? Yeah, just go 3 here and months, and that gives you quarterly PVP as well, which will give you a little bit details. When I do the analysis, for instance, on ES, I'll just do it real quick. We'll hide the SVP. So if you're to do the analysis here, I'm just going to hide this so it doesn't confuse you. What is this telling you right now? So we're in balance, right? If you guys remember, this was our prior all-time high, which we care for a little bit here. And then you see that this was outside of our value. But notice this value area low compared to the prior week value area high. Is this a pretty good spot to manage your trade?
Probably good for a long.
It's be good for long, but if you're short here, let's say you lose 56, and I think this is going to happen probably sooner than later this week. If they give you this and you short here, you do want to close here, right? And you want to flip potentially to a long position here. If they lose that and they kind of try to fix this mess here, and let's say they wick below this level of the prior weekly POC, somewhere around here. Let's say they wick below this, right? And then they have a nice candle that prints forward. You might want to get out of the way. And if it goes above this, then clearly get out of the way because this is going all-time highs. But this is most likely going to be tapped this week if I was to bet my money on it. 67, 14, 13 level. It used to be 11 when we were trading on the bottom, if you guys remember.
This is more of a, I guess, a trading question. So given that the value area high and the POC are kind of close together, is it better to just get in at the value area high or, wait
Below
to
POC.
see if, okay, so wait for them to give it to you.
Yeah, because here you're playing with fire. This is being considered as a fair price. And you get in here, well, you don't know if they're going to show up on buying side here. I typically would wait, and if you look at TPO here, right, it might give you a ledge at some point here where it's like, hey, lose this ledge and all bets are off. So combining those two might be helpful. But here to me, it looks like this, if they lose this area right here, this becomes problematic, which is prior all-time high, and you're trying to build value. You attempted to build value here, and so far you failed. So if you can't hold this, you're going to search for buyers lower. You can definitely short this and cover here and potentially flip long. Ideally, they do something like this. They sweep this low here because this is pretty messy here.
Why is that considered messy?
Well, it's messy because if the price is to be realized as advantageous, and this was the prior value area high, and you get back in something that's advantageous, how much time should you spend before you pop higher?
You bring one by one.
If I tell you the price of an iPhone is $50 right now, you're probably going to drop off the call to do what? To buy it. Are you going to debate should you buy it or not?
Probably not, no.
Probably not. But when you're telling me you got inside this value and then you're doing this, why is it taking you so long to decide whether you should buy it or not, right? You eventually buy it. Maybe you're looking to trap or grab some more liquidity, but you didn't do that. If you wanted liquidity, something like this would have been much better. And maybe that's what they execute now, but this level would get weaker and weaker. And if, for instance, you close below this level this week, What do you think happens next?
All the way down to.
Well, we have this massive bracket that we were in for some time, like 2 weeks. So now you're looking, is this breakout that we've had last week, is it confirmed? And the first point that we had in the PowerPoint is when you're breaking out, right, out of a bracket, you want to see a movement, right, that goes higher, and then you come back and retest it. Is this the breakout? I don't believe it, right? I don't trust it because I want to see the buyers show up on these breakouts. And when you look at volume, is this the breakout that I want to see? So I'm just going to draw it here. Is this it?
No, not enough volume.
Not enough volume. And the candle, the low body candle, is telling me there's not enough confidence there. Not a lot of participation there. And then if you look at this one, the following one is giving you what? That's giving you a warning sign, right? So you went above and you picked up volume, and the body of the candle is small, but volume is high. That means absorption. Somebody's getting absorbed. So, and I don't think it's buyers getting absorbed here. I'm sorry, it is buyers getting absorbed. It's not really the sellers are getting absorbed. You have this massive wick, price went up here, and the sellers pushed it back down. So now you lose this level. There's probably a high odds that we're going to revisit at least 6652 in a shorter, like let's say 2 week period, and then ultimately something like this in a longer period, right? Go to the bottom and sweep this and see how we behave. Below that, this has been the balance that we are in for some time. If you go look to the left. So then, if all of this is being treated as imbalance, right, which so far from this balance it is, then maybe a retest here would be what?
A potential long.
A good
Very-
long.
Yeah, very good long for other time frame. When everything starts falling apart, we're gonna get a bunch of news here. I'm telling you, between here and here, there'll be a bunch of blood news. When it comes here, it might not be a bad idea, right? Considering where SPY is at that point, to see, can you buy some, let's say, December calls? That's, I don't know. Let's see what this level comes up with. Did I even click it? I did. Yeah, I see it. Show up. Well, here we go. So once it shows up at like 646, maybe, you start looking at some levels that target 127 of that ratio, right? Or of that symmetry. So if that happens, then since we don't have much to the left, I have to rely on fibs. And if that's the case, let's see. Then I'll, for the year-end rally and bonus rally, you could potentially play something like this, right? And I would target whatever this level is in SPY, and we'll find out here in a second. You're targeting about 690 on SPY. So you're talking about, once it reaches 640, target 90 for December, those calls will be fairly cheaper than what they are now. Okay. Standard deviation. Does everybody know how to draw first, second, third standard deviation and when to use it?
Can you explain when to use it?
Yep. So here's our bracket, right, that we were talking about for some time now. Let's say that this is the bracket that we're in, right? You guys can focus here for a second. I'll give you 3 months and they should be visible. So here's your 3 months bracket that we are in, right? So what you can do when something's trading within a bracket or a balance, right? Well, let's say this is the area that you're in. You can just simply draw an FVP. And what I do is I just start, where did you get into that balance? It seems like this was the knock on the doors. You got back in, you're trying to defend it. So what I do is I grab the FVP tool. And for you guys that don't have a favorite, I believe it's somewhere in the bottom here. fixed range volume profile. If you click the star, it'll come up here on the top, so you don't have to look for it. I draw from the entry all the way to here. And then I basically try to find my 68% value area, which is the first standard deviation. And I have it pre-saved, so I don't have to constantly do that. And then I just copy and paste this, right? So this will be my first standard deviation on the top skew. Here's the bottom. And then if I want to shift that, you can change this manually to 95, or you can just kind of save yourself some of these, right? And here's your 95 now here, and you want to make sure it doesn't extend. So here's the second standard deviation. I would mark that. And typically, what do you expect to happen when something goes to second standard deviation?
Rejection.
Well, you're expecting rejection. You're expecting, in this case, on the bottom, buyers to show up, on the top, sellers to show up. And the third one, you can definitely mark it, right? That's going to be just 99% of that range. So it's going to be a little bit lower right here. And then you can treat that almost as a little tiny zone where you want to get in for buying, right? So if you look at it here, in this case, this is your buy zone. And in this case here, this would be your selling zone right here. So as you come here and it kind of auctions all the way to the top, you want to close it. A nasty sell-off came and then they absorbed it, right? And the rest is history, obviously. But that's how you would trade the brackets here. Ideally, what you want to do is, if you're really risk averse, you want to wait for the price to reclaim these first standard deviations to go long. If you want to get the highest percentage potential gain, high risk, high reward, you're looking to buy calls or puts at the extremes. Buy SPY calls here, sell the calls as you reach or come closer to the first standard deviation. And now, for instance, let's say if you're able to come back on a retest somewhere in this zone, that would be potentially a good long, right? That you're looking for price to accept higher. But this is the zone they are trading. So lose the first standard deviation and regain. So let's say you lose it, and let's say you're afraid to buy on the bottom, the news are getting to you. Let them get in, and this is your point now, and you're targeting basically from here to the top. This is your reward. You can manage your risk. And then the same is true on the top side here. If you take this short, right, you're targeting first the POC and then ultimately the SIG here. So it's basically ping pong in between the whole time. And I think in the PowerPoint, I give you guys a few examples of this. You guys can reference. Let me see. One second. So slides 111. So this is kind of what you can do here, right? When it's accepting the value, right? It's going above. You're looking for longs. You're looking for longs on this spot here. When it breaks above, you're looking for buyers here. Here's the rejection side of it, right? You go above and you're looking for the retest, drive to POC, second value area high. So ultimately, if you so this is our wait it for a second. If this is our bracket here, let me change it. So this would be it here, right? So you lost it, you reclaim it, you're looking for long, you close it, and it kind of taps perfectly to that level, right? If you're shorting here, right, then you can definitely target the bottom, right? If you see obviously struggling, making higher highs, change the character, that's your warning signs, right? But that's how I would play the six, right? Lose, reclaim, or if you're kind of brave, right? And you want to play with fire, and I typically like to do that on brackets like this. Lose the second sig, reclaim it, that becomes a buying opportunity, right? Sometimes I don't wait, especially if it's a longer bracket like this and the volume is light. I will look for the second and third sig, something like this. When you come to that area, buy the calls, longer dated calls, and drive it to the opposite side in a bracket. And this works on, as long as it's, 2 days plus, the bracket will work. And if you look here, this is our bracket now. On ES, maybe just a tad that's shorter. So let's say this is the bracket right now, which is at 57 level. So is it the best idea right now to buy the calls here? I personally don't think so, right? But, I think we need a pullback, right? And you could definitely draw, somewhere here to here and see, and maybe change this to 68. So here's your value. You peaked above the value. Now, if you lose this level, we can target this, we talked about earlier, 711 or 713 level there, and ultimately this value area low at 77. Then you can do the same, if, let's say, they going to be brave again. So as they arrive at this 6622, that would mean that there's a potential for buying because the third SIG is going to be right below it. And you'll probably get a bounce here at some point. You'll catch a bounce here. Ideally, they give you a bounce such as below reclaim, and then it would be a nice target here. Does that help?
Yeah, Shorty, thank you.
Is everybody familiar with types of openings above, below value and such?
Yes.
Okay. So let's do a scenario here. Tomorrow, let's say tomorrow, this is our value that's in question. Right here. Let's say by some miracle tomorrow. Say a miracle because I don't see it happening tomorrow. Let's say we open here tomorrow. We open right here, and I'll put that level to be right here, 809. How do you play it? What is the key points that you're looking at? And how would you trade this based on volume?
Retest to the value area high to go long because it's super bullish.
Okay.
Well, considering we're outside of range and value, would we wait for the value area high, or would we just wait for the range to be touched?
So in this case, you do not want them to dip, below previous day high, which should be at this level here, correct? Considering the value area high is maybe a penny below. So I think this one is what, 2.25 below, right? They could definitely do some weird stuff. Let's say we open here. Ideally, they should not lose this level right here, right? And you're looking for potential longs to go here, right? If they lose that level, you'll be wrong, right? But then what is in play?
%80 rule in POC.
You will have a really, really good chance to at least go to this POC and this value area high zone, which you could target from the top all the way to the bottom, right? Somewhere around here, you could take that, right? So if it fails, they give you, that they're not looking for prices higher. This might be a good short to drive, right? That's in case we open above PDH, right? And on the PowerPoint you guys have for your reference, there's kind of 4 opening types that you guys have, right? Opening outside PDA but inside the range, outside the range, and then opening within acceptance and rejection, right? So if you guys think about it, we only covered the first one here. Outside of the range. If you open outside of the previous range, PDH, PDL, and is accepted, that means the market sentiment has changed. You should look for the following scenarios. Market continues in direction of the breakout. Market will auction back and forth, but not go inside the previous day's range, creating new value area. That's important. As long as price does not go back inside the previous day range, market has accepted the breakout up or down. So the opposite side is if you fail here, there's a very high chance that you will go and traverse all that way down, trim at the POC here, and then target the value area low. Does that make sense? So this is one opening type. We don't have a lot of room. Can it open in between PDH and value area high here? Sure, right, statistically, but the odds that it's going to open between these two levels is fairly low. Does that make sense what I'm explaining?
Yes.
Yeah.
So typically when the value area high is this high on the volume profile, is that bullish or bearish?
Bullish.
It's bullish, right? Ideally, if they would have closed, where would you have been able to swing calls? What's the level that they should have closed above and we could have swung some calls?
Above the POC.
Oh, yep, you guys are right on. So you have the value area high and you have the developing POC. The value area high tells me that they're not interested, right? If they held this level, that would tell me that they're interested in building value higher, which they tried, but then they got sold off again. So tomorrow, for intraday session, if they're able to go above the 72, we're looking for longs. Does that make sense? And if they come here and they fail and you see some absorption happening, they might even fall short here. They might even come to this level here about 68. If they come up here and they're not able to kind of hold it, oh, that might be pretty bloody, right? It might be that they're not really interested in the action. And this level here is important, right? So from long-term auction, as long as we're above this level, are we bearish?
No.
Yes,
Bullish.
as previous alternate.
As long as they're above this level, you're bearish.
Oh, bullish, sorry.
Yeah, as long as we are holding and building value here, you want to be careful how you perceive the market, right? There's nothing really bearish until they crack this 56, the prior all-time high. Because remember, when it's a breakout, just kind of like on day to day, what I'm talking about, market will auction back and forth, but not go inside and replace this previous day's range into previous value range. As long as they don't go inside of it and crack. Here they trapped a little bit, and then they got in a little bit inside, but tomorrow, let's say they crack this and something else would change here. What is that something else?
Framing down.
It would start framing down. And that's when, when did we start framing down at all here? You're framing up, you almost framed down here. And what happened? Somebody talked about it earlier. We had a short cover rally, too many shorts piled in, and another framing up, framing up. So now you're very close to the PDL, right? You have a chance to play a double roll, right? And this roll is fairly important. If the Bulls want to play game tomorrow, ideally open above this level, which would mean you're opening above the POC of prior day and within the value. And as long as you don't lose this level, you're looking for prices higher. If you open below this level here, this zone here might be, a chop fest. What I mean by that is between here and here, this will be just nasty, this yellow area. It's just going to be disgusting to trade. So, use this as your guidance, right? Open above, you're looking for value higher, and you want them to fill this volume here, right? There's a lot of volume, but you want them to start building more volume before the next move up. If they show lack, right, of confidence and they open here, what does that tell you then? That volume up here was not really interesting for buyers, right? It was more perceived better for sellers. And not necessarily do we have an access here yet, but they're clearly rejecting or exhaustion occurring for buyers. So they're going to look for opportunities to find some buyers lower. And based on this, right, you can clearly find that there might be some opportunity for them to start buying here. And then you're going all the way kind of bottom here, 712, 713, which happens to be that cumulative POC that was massive. And you can see just day to day how many volume nodes were at this level here in this area. So pretty certain they lose this PDL, lose this area, go to 41, and ultimately you're going to go to that 713 level. And then we'll figure out the rest probably somewhere around here, 6633 or so. But does this make sense? Opening above, you want to hold a PDH, opening below, and you don't want to reclaim here. So the bearish scenario would be, or bearish to bullish, if they open below the PDL, which kind of doable on Monday. If they open here and they reclaim this here, is especially the 57 is there, is that your spot to short?
No, they need to hold that, right?
Yeah, no, you do not. If they open here and then they reclaim this level and they get inside this value, most likely they're going to go here, do a bunch of crap here, and then I think you're watching for a break here or break down from that level. Can't draw today. You're looking to see which way did they go, up or down from this level. Up, retest longs. If they fail here, retest short and target the PDLs, and of course 41.13. But that would be the scenarios that you have: open above PDH, open within and reject. And you could open within here tomorrow and they could trade here all day. Right. They open inside this area, which I think there's a chance they can do this here. The most probable outcome for tomorrow is this one, or I would say this one here. This one here would be, I would say, not very probable, right? And this one here, I would say, is probably the third highest chance is here. So above, you're looking at PDL, PDH. If the value area highs are very close, like this one here, I will relate to that one a lot more in combo with the PDH. If you open inside, then you're looking to see, are you trying to reject? And if you try to reject higher but you fail, that's, there's not enough buyers that are aggressive enough to drive the price higher. That's pretty bearish, and they're most likely going to go to the opposite extreme. My favorite 80% rule setup is driven when we open above. You open above this value, and then you get inside the value here. And let's say you have 3 10-minute candles closing inside. There's an 80% chance that you're going to go to this value area low, and that's why it's called 80% rule. Does everybody understand this?
I do.
In the three, sorry, in the 3 10 minutes, do you still wait for them to retest, or it just because it doesn't always retest?
It doesn't always. I typically get in, like, I like, if I see besides just the 3 candles, I would look at order flow, other components. How is NQ doing in relationship? Is NQ leading or is it, lagging? I look at all those details, but I don't base it just on a binary of 3 10-minute candles. If I see weakness elsewhere and I look at the Mag 7, right, that they're making lower lows and they're struggling, then I would just base it off of the entry of the 3 10-minute candles, not maybe wait for the retest to be a perfect entry. I think the context plays a role, right?
Shorty, the 80% rule, do you usually play on the previous day values or
Always.
Okay. Always
Always
previous day?
Always previous day.
Okay. And not on the developing current.
No, developing them. You do not want to play it. So this is this is the value that's in question for us tomorrow. How are you opening in relationship to here? Are you opening here? Are you opening here? Are you opening bottom of it, right? POC, or below it? And then once you open, the question is, let's say you open here, very good chance and a reward that you can drive it lower, right? That's why I like it when you open above and below, because it has the best risk to reward and gives me a full value area, right? And you do not want this area to be explored before. So the only area, if we are to open, let's say above here, right? So this is the only time this area has been explored here. This area has been only explored once before, am I right? So if they open above it, that sets up really nice drop here, right? Between here and here. Because it's been unexplored one time. They set it and now they're gonna most likely offer it.
Got it. And do you use the previous week
It's same way.
values as well? Same way.
Same way. Same thing on the weekly. So if you go here, let me just adjust real quick. So if you go on the weekly here, and I typically go about an hour on that one. So here's your wait, this is our weekly. So here's your weekly, right? Same thing on the weekly. So if they open above the weekly, which is sitting somewhere around 82-ish, I believe. You open above it, and typically if the POC is very close to it, I wait for the POC to clear. If the POC is on the bottom, then I area high. But for instance, weekly here is pretty clear. You lose this POC, and let's say they give it maybe for a retest tomorrow, 66. This level here is perfectly aligned for a revisit. Almost too good to be true, actually, that they're giving it this way. And you have, 2-week value area low and high matching, and then you have this POC that's here as well. So it becomes pretty easy here, I guess, if they don't clean up tomorrow or reject lower prices immediately. This looks like we're headed here. But I'll do that same thing on the weekly, monthlies. You can do that, right? It's just that you have to adjust your trading on the time frame that you're looking at. Okay. If you look at it monthly, it might change a little bit.
And
Sorry.
does the 80% rule apply to IB at all or no? Like
IB was the initial balance.
Yeah.
Not necessarily, not really, but you can carry forward initial balance from the day prior, right? So if you take a look at the initial balances here, for instance, this was Thursday's initial balance, and now you can see when the initial balances overlap, you can almost treat it like, hey, why is your initial balance overlapping so much as you're auctioning higher? What you want to see as well is you want to see kind of stacking. When they're overlapping, that typically tells you that other time frame participants that drove the initial balance or break of initial balance might not be that strong if they're not able to sustain it. So take a look at the failed IB that we had right on Thursday. They went below it and then they cleaned it. The next day, it's in the rules of IB failed auction is that you're going to visit the opposite IBH, and they did. Now you went above here and you failed. Well, you're going to visit that one, and look what they did here. They came back to that IBL as well. So can they play a role where you make conclusions based on it? Yes. But on the weekly and other time frames, I wouldn't use IB. It's more day to day that I would use the IB for.
Thank you.
Sorry, question. Regarding the 80% rule, if regarding the area not being explored and only explored once, does this apply to overnight as well?
I don't use overnight I don't count overnight.
I see.
Overnight can be a lot of fluff volume. So I don't really apply that. No. Okay. And all the examples that I have for opening within value and above value are between slides 33. And they give you each example of how and what it means to be accepted, what it means to be accepted here with an example, what does it mean to be rejected, and then opening within value area, rejection, and a bull and a bear scenario and what it looks like. Opening outside but within the range. This is usually typically the one I hate trading. Is when you're opening above value but still within the range, because that value was at that point at some point high enough, but then it got shifted lower. And then you're opening and it's still not very confident. You're opening below the range high, within the value area high, for instance, on the bullish side. That's not a lot of confidence for me, and usually there's a lot of traps in this type of day, and that's why it's not one of my favorites. But I still play the 80% rule that come out of this as well, but ideally, opening outside and failing is my number one go-to for 80%.
Shorty, general question. So for the volume profile, we are going to use not just the RTH but the ETH as well, right?
That's correct. You can use you can use it. It doesn't hurt to use ETH and volume profile analysis, right? You will gain a few volume bars, for instance here, right? And nothing is going to shift here much. Typically, will not cause a major difference in volume or your levels on ETH volume. I think for the weekly here, it shifts the volume a little bit. Let me see. I think it's can be slightly different here. So here's ETH. And you see here, the volume here, the volume area low is a little bit lower with ETH. And then let's shift this on RTH. I'm pretty sure it's going to shift higher a little bit. And it, well, actually, maybe this one shifts higher here.
So when we draw the previous week or previous day value area, you generally do use ETH?
ETH, yeah, I use ETH for it. Because it gives me a full view, right? And market profile, I use RTH so that way I know where was the focus on time, and then it gives me the confluence to make sure that I'm covering both ends. I'm covering volume ETH, and then my market profile is RTH, which is more important session for me, and where volume really comes in. But with combo of those, yeah. And you can just make it RTH. You will not lose much, as I've shown you here. You will not lose anything actually. You can stick to RTH if it makes it easier to be binary. Just a preference, right?
And one more question, a very general. So when you start the day, is there a time where you think it's not a good day to trade at all, and just
Yeah, after Europe close, I would say shut it down till about 3 o'clock. Usually the deep period, about 11:30. Once that comes to an end, volume dies off.
There's no point trading.
Yeah, typically you guys hear me. I trade in the morning with you guys, and then if I'm done, I step away, or if I'm not done, I would come back 2:45 to prep for the L&M period and see what they do. Usually between 11:30 and 2:45, it's not the ideal time to trade. Okay. If we talked about this before, hopefully some of you guys can start recognizing the day types. As you're trading, it's very important that once you identify the day type that you're having, right? And if you can identify it in early sessions, right? The other day when we had a massive access high in a period, I was like, well, this looks like almost it's creating a lowercase b shape. And then they rejected the bottom, and I'm like, well, if they can't break the high here, or if they struggle, it's going to be a B shape, right? And we had a lot of those scenarios, I would say, on market profile side, a few days in a row. Let me kind of show it up here. Shift this. So knowing the date types, right, that you have, whether something is normal, and what does it mean to be normal, right? Normal days, you're expecting A and B, right, range to set the range of the day. So whatever A and B have done, the periods, the first 1 hour, you're expecting that to be the range of the day, right? When you have a normal variation, right, that's the next high in confidence would be the normal variation type of day. Usually you do not exceed IB2X. So when we're talking about IBs, right, the first hour, if you go above 2X, that's typically going to cause a trend day. If you're staying between IBL and let's say IB2X below that, that's typically called extended typical, and that's kind of what we had, I would say, here. So if you put the initial balance on 2 periods, okay. So if you look at this session here, right, you have the IB, the dark box here, you went above it, right? And, if you extend this initial balance, your IB2X is sitting here, so you went above, but you came back. So that's pretty, extended typical. Then you went below the IB here, and then you close below it. If you close somewhere neutral here towards POC, that would most of the time cause what type of day? If this would have went back here and closed somewhere here, you have access. Let's say if you had access on both sides here and here, and you closed inside, what type of
Double
day?
distribution.
That would be neutral day, right? If it was access here and access on the bottom, you're going to close in the middle. That's neutral. There's no access here. There's no access here, right? There's a poor low and a poor high on both ends. So this is more of, extended typical type of day that you're having here. Normal trend days, right? You would have, typically you're going to go over IB2X, meaning that if this price action would have proceeded and gone here and not failed, right, that's most likely gonna go treat the trend day. And typically you do not want to go at least inside the IBH if you're gonna have a trend day, right? You want to hold above that because the C period or whatever period broke it. That means the other time frame participants are not strong, and that's what you want to keep an eye on. Does that make sense? The IB plays a big role in terms of them continuing with the trend or failing to cause a trend. And a double distribution, I mean, if you think about that, is, you have a day here, you're consolidating, and then, shortly after, you're like, oh, that's not the value. You want to go lower, and then they start building it, right? You can have double distribution trend days as well, where you consolidate, right? And let's say you go here and you trend higher, and then you create another, and you continue to go higher. So that's a double distribution or triple, right? And then the neutral days is what we just talked about. You have access on both days on high and lower end of the IB, and you close in the middle, right? And those days you typically want to avoid, just because it's going to be miserable to trade. Just can't see if there was any neutral days here. Some, but not much. So I would say this is fairly important for you guys to at least print it out or remember it, start recognizing. The other day when we were trading, I mentioned something that, on a lowercase b, you guys remember when I said, I don't know who was on live, but I said, whenever you have a lowercase b and it closes about 50% of that day's range, typically is a sign that trend's not going to continue. Does anyone recall that?
Yes.
I mentioned, so here's that, right? That's the rule. Is it a written rule that it works every time? No, but it's something you want to pay attention to. And for instance, pay attention to, here's a lowercase b. If you take the midpoint here, let's just add the midpoint so we don't have to calculate. So the midpoint is sitting here and you're closing well above it. That means that trend lower is going to be questioned, right? Most likely not going to continue. And here's this one here as well. So the midpoint is sitting here. You close below it. What happens the next day? Continue lower. So you could definitely use this almost as a gauge, right? And this one is a double distribution, right? You guys can see that there's one here and one here, and you're basically closing somewhere at the bottom of the distribution. So what needs to happen on this day, if you guys remember, actually we traded this. If you're able to reclaim this level here, oops, what did I press here? If you're able to reclaim this level right here, what does that mean? Well, if you reclaim this, you're most likely interested in this poor high here, and you're going to be looking to go drive it all the way at least to this point, right? But since you failed and you have a B shape that you failed, you continued lower, and then you got a little bit of a short cover rally with the access and a reversal here as well. And when this failed, this basically caused this, I would say this was really a major short cover rally here. That covers, I would say, the day types. You guys have to spend some time and identify and read. I can read through this, but this is not gonna, it's not gonna give you guys what you need. I have it here for you guys to read through it and to apply it, which means that you have to read and be like, okay, well, I'm watching this. Does this rule apply? It did. Does it work here? What does it mean about, single prints and a double distribution profiles like a B shape? That's here. And the rules would be how to trade it are also presented. So you will have to spend some time, I would say, with the charts along with the PowerPoint and kind of reference what I'm giving you to see how does it reflect on your trading itself. The last piece I want to cover here, any questions so far on volume profile, I guess, from SVP, PVP?
I think I have more questions regarding the midpoint. Is that only
Sure.
for like lower B shapes? If it covers like if it retraces to 50%, then it's like not going to continue.
That was necessarily that was for lowercase b when we had this liquidation.
Okay.
It was lowercase b. For B shapes, it really doesn't matter that much because you have the two high volume nodes. And I would say that's probably more important than a lowercase b or p, right? That applies P and B, but not necessarily in a B shape. I think your distinction on the B shape is not necessarily the midpoint, but you should see some low volume node or single prints in between.
Gotcha. Thank you.
Is everybody familiar with volume anomalies? Are you guys, is anyone that doesn't understand them?
Is this like the Anna Coling book
Yeah.
about anomalies? Okay.
Yeah, it's very important that you guys correlate that because the three things that help us understand if the auction is moving right directionally correct is value area placement, the value area width, and volume, and then the volume anomalies play a big role. So, is this an anomaly here?
Yes.
Yep.
This one is this one anomaly here.
No.
Okay. What about this one here?
Yes.
Okay. Why is this one an anomaly?
I would say that the one you pointed to previously is bigger than that one, but yeah, it has larger volume.
So what about this one here?
Yes.
It's definitely an anomaly, right? And what you're paying attention to is that you want to see the body of the candle and volume relative to what you're seeing elsewhere. So for instance, and usually 330 to 4, these candles, I would say don't pay much attention to those unless you're just looking at the daily, right? But relative sizes of candles play a big role, right? And how they're kind of built, right? So if you look here, this is actually a pretty good example here. You have massive buying volume at first, and then right after that, you have an overlapping candle with a little bit more volume. So the way you would treat it, right, is these are your two master candles that, in 30 minutes, this is your IBH. Whatever cracks here is probably the direction you want to go with at some point. Because at this point, it would be the absorption of sellers. If it was below here, right, absorption of buyers, and you would continue. But you want to use this to tell you if what you're seeing from the breakouts. So for instance, if you look at this, you can have multi-candle anomalies, right? So if you look at this one, look at this. Big volume, big candle, not a lot of body here, decent volume. Then this one has more volume than this one, but it's less than the first one. And then you have this one, full body candle here with a lot less volume. So to me, this is, there's anomalies being built in this level here. And I do cover that with examples from the cooling book. It's important that you guys understand it between the anomalies, I think on slide 122 or so. I covered 80% rule here. Let me give you, so here's the cooling examples, right? Which will help you guys, especially if you've never read it. This is the average volume, right? Widespread on the body of a candle. High volume, that checks out. Like, this is pretty valid. Low volume, narrow spread on the body of a candle, that checks out. That's correct. You have low volume and low body, that's okay. Right? This is talking about the effort, right, and the result. And if you think about this here, for instance, this is picking up low volume, low body, a little bit more body, more volume, rising volume. So this is a multiple candle kind of validation. Does that make sense?
Yes.
Okay. This is your effort and result. What does it take? So if this one had the lowest volume here, this would be somewhat concerning, right? Anomalies like below average volume and the widespread body, right? It's basically telling you not all the participation is here, not all the time frame participants are in this candle, considering, let's say it's a breakout candle, it's concerning, right? So you want to be careful when you see this, and that's what we say, make sure the volume checks out, right? Then you have the validation multiple bars, and you see on selling, this also checks out, small bar, right? As we pick up, the volume is rising, that's pretty good, right? Okay, I think now we go into the fibs. So hopefully the first session, go ahead.
So
In that example you
here
have right there, where it's like increasing in body candle sizes, but volume is getting less and less.
This one?
That big? No, back on the charts.
Oh,
Yeah, the most recent one, where you
Yep.
highlighted the volume going down, but
Yep.
candles going up. I don't know how to I don't know how to understand that particular movement.
Well, it's just the information that you're using on this breakout. So this breakout here that you had, this was the level that was kind of being questioned, right? There's a lot of volume here. As you're auctioning higher, you want to see more participation and more people interested, right? As you auction something, you want people to be interested in a price to keep going higher. As you're auctioning higher here, the volume is, dwindling. It's really fading away here.
Mhm.
So eventually, if you're able to, let's say, if this was a volume that was interest us, right, the value area at the top on a P shape, if you're to lose this, what happens with this volume? Is it pretty significant?
Probably not. Should just drop right down, I guess.
It should just drop right down. So when you're trading this, the way you would use it is this is most likely going to drop and drive quickly because there's just not a lot of buyers, aggressive buyers showing up as we auction higher. And that's what you use it for. That, and it should give you some warning signs, I'm talking about, higher time frames, right? If you're to go here and you look at the volume. So let's just talk about initial balance and hide it for a second. So for instance, right, the last time that we auctioned above average volume here on the weekly candle was here and here and this candle. So we had only 3 weeks where the volume was above average. And then potentially take a look at this one right here. See this?
Yeah.
So if you look at this one, really high volume, and the bar of that one does not add up. So there's some concerns here, right? This whole price action here doesn't seem to be driven on a lot of volume. There is some goodness here, right? If you take a look at this here, and then you compare it. You compare this, for instance, low volume, right? That means maybe just some indecision right now, and they're not really trading with volume. Then it picks up, decent sized body, and then this one picks up more, good checkout. So between these three here, is there an anomaly?
No. Confirmation.
Yeah, this is pretty good confirmation. Indecision on low volume. So now, on a I would say a weekly, there's a confirmation that there's some volume sitting in these candles here. And if I go on daily, just to see kind of day to day what's happening, it's pretty sporadic, right? So if you look at this, there's an anomaly on volume here, right? So this one starts off with the highest volume and a really small body, then a bigger body of volume, smaller volume here. And then you have really a pin candle, right? A hammer, inverted hammer here with a little bit of volume. That should be kind of concerning right now, especially considering where we are, right? So at that level, you lose this, there's very high chance you're gonna go down. There's no volume, at least until you get to, let's say here, this candle here had some volume, also a wick on the bottom. So could you target the bottom of this? Certainly, right? That's about 100 points. Just on volume analysis, right, off of this. But you can see where the volumes are coming in. Here's another one, big volume. We're going higher. Look at this, highest bar volume and highest candle, and what about volume? It doesn't check out. So here it doesn't check out. On daily here, a little bit of concerns right here, and a big anomaly here. And that happens a lot, I would say, even on smaller time frames.
So with these anomalies like continue to build up, are we expecting like some kind of, or is there some kind of like fix as would like volume profile where like there's poor lows, we come back and fix it kind of deal?
Necessarily poor lows. Poor lows would be just on the auction on the tops and the bottoms, right? I would say anomalies happen anywhere in between, right? Not only in the extremes. But to me, what it signals is that I'm aware of the participation of the trend. And if I was to see that we were picking up volume, greatly here, as we're going higher, I wouldn't have my doubts to go along maybe on the retest with the larger position here. If this volume was like, picking up high and going higher, because last time that it did that was at the lows. It seems like they're not doing the same thing right now. So my concern is how valid and is this trend dying? And to me, it's giving some warning signs here, at least on this candle right now from Friday.
Gotcha. Thank you.
Yep. Well, I think that's it for today. I think we'll have another session to go into some more examples. That would be, I would say, a level up from the basics that we covered today, is to understand the actual shifts and go through examples, really no PowerPoint, but go through the charts. Because that's, and take a week and analyze it, and you guys take a week and analyze it. That'll be the next step in the next class that we do on volume profile. Because this is just to give you the language, understand the basics, few setups, and then next is analysis, right? Day to day, week to week, month to month, so you guys can understand how to put it to use on a smaller and a broader time frames. All right. Well, hopefully you guys had a good session. We'll see you guys. I will see if I can schedule a session tonight. I have to attend my nephew's birthday, so I'll be out from about 4 p.m. here till I get back. So I'll schedule it prematurely here, and let's see when I get back, and then we can hold a session for tonight.
Thank you, sir.
All right.
Thank you.
Shorty.
Bye-bye.
Thank you.
Thank you.